Yo, good morning, everybody. Close my window real quick. Good morning, y'all. See, what did you say? If I could pull it up. Yo, did you know that your name means God with us, Emmanuel? I never knew that. It's pretty awesome, bro. It's very fitting that we met. Yeah, I hope y'all are ready. I think this week it's already starting not to be 100% correct. Let me see. So yeah, hopefully you guys had a good weekend. I wasn't feeling too good yet the other day, so luckily we feel better today. But regardless, the show must go on, right? So on Sunday we talked about the bonds and yields, potentially continuing. I mean, they have like a little crack in correlation somewhat. We'll see if that ends up changing, but nonetheless, if you look at the dollar, price broke down. I talked about it could retrace into this wick. Preferably, it doesn't go beyond the 50%. We pretty much see that it hasn't, right? We have, for the most part, not really even came close up there. Pull up the news real quick. So we have news at 7 a.m. So it's probably going to wait. The secretary has been in conversations recently. This morning, I believe, if I'm not mistaken. But we'll see what the result is of that. But nonetheless, the currencies have gravitated up. We already hit our target on the euro. I think that we could see this continue. If you guys remember, I planted the seed of this level for quite a while. I said that this may become a target in the near future. If this was a balanced price range where this gap right here was filled in already, instead of just offering sell side, it would be a lot less important. But look at how fast it seems that they want to get up there. So the thing that has had my attention, if this was to break this high, is this. And you can now see also high, low that takes stops, higher high. If we move up a little bit further in price, we have a low, high, failure swing, break above that high. So that's a balanced price range, type 2 dealing range. The start of that move that went lower, that was part of this failure swing in here, now becomes a target. Okay, so we could very easily see this thing get up here, and if it goes up here, if it flies through it, I really wouldn't be surprised to see that price is going to try to take this high out. And again, this is for the euro. Okay. So with that being said, if the dollar continues to do this, right, we're going to have to see some speed through the lows here. I love seeing these equal lows here. This is very nice. Yeah, if you guys could let me know if you hear everything okay, see everything okay, I'd really appreciate that. Sometimes it's giving me these errors, which it is right now. Seems healthy. Says it's healthy. What's up, DJ? But yeah, let me know if you guys could see everything okay, hear everything okay. Is the music too loud? All right, just let me know in the chat. Okay, everything looks good. Okay, good. Good. So yeah, again, I really believe that the dollar, we may see the dollar continue to go through this. We got the yields rallying. Unfortunately, it's got a crack in correlation with the dollar. It's starting to tumble a little bit, right? It's falling a little bit. But we'll see what happens. we completed a market maker buy model in here. So this high down to the 20% or 25%, if we were to measure the high to the low right there, the 25% is the max I would like to see it trade down into to still be valid to go higher. It's also coupled with this retracement. Again, this is the yields. This has an influence on what the dollar does and a reverse influence on what the foreign currencies will do and the indices. If the indices are going to go higher, we'd like to see this go lower, and this trio of assets, the 5, 10, and 30-year bond market, we want to see that go higher. Clearly, it's having somewhat of a hard time. There's a lot of things on the back end happening. We just got beyond the interest rate conversation, which they didn't do anything to the interest rates. They kept them the same. I believe something's happening with Japan. I think we're bailing them out in some way. Japan's very important right now. They're like the largest holder of U.S. debt, basically U.S. treasuries. So if they start dumping things, we got to be aware of that, because they might have to save their currency. And then they might have to increase their interest rates, which were at zero for like more than 10 years. People were borrowing money in the yen, turning it into dollars, and then investing all over the world in all stock markets in all countries. So if the interest rates go higher, that debt is going to become a lot harder to manage. So that could have an issue. People could pull money back to Japan, and that can have an influence on the market. It could be a catalyst, an excuse for things to happen. So again, this dollar is going lower. The only way I'm not going to go lower for the dollar, given this hard breakdown, is if price gets outside of this breaker, this candle, but more importantly, above this inversion fair value gap. I want to see this hold in this wick in here. So let me actually make it even more obvious of what we're looking at with that. Forgot to save this template. All right. So I'd like those equal lows. We do have a pretty large drop in there that came off that low. So we're going to have to really start to see, like I said, this get respected. It could come back up a little bit. Preferably we don't. If we stay in that lower octant, that's great. That's beautiful. And then we get displacement. We have an inversion fair value gap here too. And then outside of this perspective, you guys know we talked about this as a potential market maker sell model. If we get below this level, this is a balanced price range that should hold bullish if it's bullish. Okay, low, high, high, low, higher, high. And it showed the respect to that idea right here. Came down, tapped it very little, didn't retrace to the midpoint, and then kept going higher. And then we hit these large higher time frame levels. We're inside this 3-month breaker. It's also a monthly breaker. And we've had a hard time. Rejection blocks stopped the price from going higher, and then we changed state of delivery. And now we're breaking through these levels. Right? We have the order block that's been engaged, rejection block that was respected, low that's taken out, volume imbalance, fair value gap with the volume imbalance. And now we got this bullish order block closing below the midpoint. We have more than 3 PD arrays being violated in this drop lower going against the buy side delivery. So in that case, we're not going to be bullish unless this was to get up above some of these levels and start doing things the other way in terms of invalidating levels. So if this continues to go lower, what do you think is going to happen with the currencies and the indices? Well, we should continue to see this thing go higher. So my objective, as it's been since Sunday, if we were to break this, it turned to a market maker buy model. I actually took a buy in here yesterday. I was sick, didn't feel good, so I didn't hop on early on, but just showed another example of the fact that once you know this stuff, you can go in at will and find setups. I shared it with my private group when I did it while I was in the trade, but it's okay to take days off. You know what I mean? I'm still trying to get better at that because I've just been obsessed for 7 years today. Isn't that amazing? It's been such a long time. Happy anniversary to me and my trading. Yeah, been a long time. Good morning, elders. Appreciate you guys hopping on. Again, I hope you guys had a good weekend. But yeah, does all this stuff make sense? Does everything from Sunday carry over to what it is that we're doing today? You guys see how everything kind of goes together? I'm actually going to go to the bathroom real quick, so give me a second. I'll be right back. Okay, we're back. We're back. Oh, damn, 4 people hopped off. No patience or what, yo? Sucks for them, I guess. Yeah, what was I talking about? Or I was gonna say something. I don't know, maybe I'll remember. But yeah, so it does seem like we're gonna be correct here. We have news at 7. It's NFP week. You guys know the rules. If you don't know the rules, excuse me. If you guys don't know the rules for NFP, just let me know. Or maybe I'll just mention it, right? Every single day you should have 1 to 2 trades in general, but even more so on days like this and weeks like this. You don't want to be going too hard on NFP week. If you have less than 2 years experience, you do not know what the hell you're doing. So for you to try to engage this market aggressively, like somehow the volatility is going to be nice to you when you have nothing. Okay. It's needless damage that you're going to encounter. You may see this person or that person. You may see me or anyone else do something who's been here for a while. But that doesn't mean that you should be encouraged to go in there and start winging it, right? The people that engage that you see that do well, they know what they're talking about, right? It's obviously, few and far between when it comes to people that actually are worth listening to on the internet. But you need to be very strict with your rules around CPI, NFP, rate announcements. There's a lot of stuff happening on the back end right now in the economy. There's so many things that people are just not paying attention to as they get lost in the chart. Okay. So, 1 to 2 trades, preferably one, give yourself one bullet, definitely one bullet per day after Wednesday. Monday and Tuesday are the best days to trade on NFP week. I mean, look how beautiful that was. If I was on the chart, I have really zero doubt in my mind that we wouldn't have caught this market maker buy model. That I used this bigger market maker buy model to take the buy that I shared yesterday in my private group. Right, that little buy that went up like this right here. It was an order block. It was on my phone. But this is what it was, right? It's a market maker buy model. We're above the accumulation. That made me have confidence that we're not going to retrace very deeply. So I engaged this to simply reach for this, right? So regular trading hours gap. Again, all of this stuff, those of you that have been here and like you're showing up and you're actually listening to what is being talked about and shared here, you saw, even on Sunday, I pointed these out as possibilities. If price was to get up above this, I also mentioned this as a buy model on Sunday as well. So you've had the tools, you've had the framework, you've had the outline of what my narrative is going to be this week and what I want to see happen. It's NFP week. So again, you still got to be pretty cautious. Don't be aggressive. You can if you want, but if something happens to you, you're going to hear me saying this in your mind and you're going to regret it, But if you know what you're doing and losing a trade doesn't matter, right? Because you'll make it back at some point, then of course you have a little bit more freedom. But until you get to that point, until you feel that you know what you're doing, you got to be extra cautious because there's really no benefit in you going out and blowing hundreds of accounts because you just don't want to follow rules. There's no benefit to that at all. Okay. And every moment of every day, every hour, every 15 minutes, I can teach you how to find a setup. Okay. Something that could go at least a little bit so you could be a part of it. Not that that's something you want to aspire to do, right? But it is possible. So there's never a lack of setups. If you miss a setup, don't get reckless, right? If you know it's NFP week, CPI week, rate announcement week, you got to just chill out. Focus on the craft, and the craft will pay you eventually, okay? Of course, nothing I say is financial advice. And if you guys do get value and you appreciate what I do here on YouTube and all the content that I put out in regards to trading, definitely don't forget to like the video, subscribe to the channel. We got 8 people on, 3 people liked. What's up, yo? y'all don't like me? Y'all don't like me? I'm gonna cry. But no, for real, I appreciate you guys that support me. And if you guys can do that, I'd really appreciate it. But yeah, do you guys have any questions? We're still in pre-market, so I'm not gonna go too aggressively with identifying a setup yet. Yo, good morning, Maddie. I know, I'm just kidding. I'm just playing. But yeah, hope you had a good weekend, Maddie. Who else is on? We got DJ, Emmanuel, Elders, Maddie. Lots of private group students with me today, huh? Y'all know the vibe, yo. Y'all just been here. You know what it is. But yeah. So if you guys have any questions, let me know. Again, I'm not going to really do nothing early on, but we'll see what happens. Let me see. Royal Simba, welcome. Since you're new, I think you'll learn a lot here. I appreciate you hopping on. You could be anywhere else, and you're choosing to stay here and listen to me and what I have to say. So it's always greatly appreciated to all of you that do choose, these live calls and what I do to be a source of information for you. New to all of this, just trying to figure out what's going on. I have an account on Lucid. See, so right there, you saying that you're new to all of this, does that mean that you're new to trading in general? Yeah, Emmanuel. Okay, yeah. So the first automatic mistake that I'm seeing just from that statement is you have an account on Lucid and you have no idea what you're doing. What's the use in that? It's like buying a lottery ticket, And of course, nobody likes to hear that. We need skin in the game, right? But there's good skin in the game, and then there's needless damage that's going to be accumulated and scar tissue because you don't have the weapons yet. That's like going into war without going to any boot camp, because this is war at the end of the day. Anyone on the other side of my trade is going to pay me. And same thing, if I'm on the wrong side, I'm going to pay them. It's a constant battle of people trying to take each other's heads off. So for us to aggressively try to hurry and get something that seems like a good idea at first, and it's cheap, quote unquote, in terms of like a funded account, before we have any real weaponry in our arsenal, it's a horrible mistake. And again, it's not a popular opinion. Mentors don't like to say this stuff because people get, discouraged or something, but it's like, it's kind of needless to be discouraged by hearing good advice like this, because, people don't have students' best interest in mind. So they want you to be addicted. They want you to turn the markets into a drug addiction. They want you to depend on them as if, you'll never be able to walk on your own and they're the oracle, right? And that's how they teach a lot of times, right? That's why they encourage stupid stuff. But then who's the one that's going to get hurt at the end of the day by following, these people that are honestly irresponsible with what they are doing, especially since most of them don't know what the hell they're doing. Who's going to be the one that gets hurt, though, by listening to bad advice or following the hype or trying to rush, right? Or feeding into, the marketing, right? And not focusing on what truly matters. The person, right? The student is going to get hurt. And then it takes longer because once you do figure out what you're trying to do, you've built up so much scar tissue that you have to fight through. It's a really, really endless battle. So I wish that I would have taken this advice when I first started. Everybody was screaming it at me, but how human nature is, especially us as men, we're stubborn. Nobody's going to tell us what to do. Okay. I'm going to do what the hell I need to do, what I feel I need to do, even if it may be wrong. I'll figure it out if I'm wrong, right? But you don't want to have to approach this like this. It's very psychological, this game. And if you can't, do the right things early on, it just makes it harder for you. It's not that you won't be successful by making these types of mistakes eventually, but it's needless in my opinion. It really is. And don't let that discourage you. Everybody has to start somewhere, and there's right ways to do things and wrong ways to do things. So, but yeah, that's my opinion. Again, hopefully again, that's not meant to discourage you, because I did the same thing. All of us do the same thing. But after 7 years today, right, is 7 years for me. I've experienced a lot. I know what the mistakes were that I wish I didn't do. All the needless money, tens of thousands of dollars I lost for no reason, which could have been put to better use when I knew what I was doing, right? But, that's just a temporary thing anyway, You'll make back everything and more 10 times, 100 times if you plan to be here for a long, long period of time throughout your life. So, yeah, that's my opinion to any of you guys that are new. Don't rush into a funded account, okay? It's like literally, honestly, it correlates with buying a lottery ticket. You might as well buy a lottery ticket because, there's better odds in that versus someone that comes in and just tries to rush to profitability. Profitability is hard. It takes a lot of layering in terms of learning and experience to be able to reach it. And it's very important who you listen to, who you allow into your mind for influence. It's very important because, again, we're in the Wild West on the internet. Okay, everybody's trying to sell something. Everyone's trying to do this and do that, and most of them don't prove anything. And so it's like the blind leading the blind. But then you discover a community like this where every week, we're calling the market and it goes to what we are saying it's going to go to. Like, this is a good example. We literally talked about how its possibility to go higher and why. And look what happened. We went right to it. And Monday and Tuesday are the best trading days on NFP week. And I would say that's a pretty damn good run right there. Right? This here was a market maker buy model too. But again, the level of comfort that comes with, giving yourself grace, admitting that it's going to take some time, for you to get all the weaponry that's required. Like effective military doesn't become an effective military overnight. Like, they got a lot of training, they got a lot of strategy that needs to be done, technology advancements, a lot of planning, a lot of experience. Okay. And, it's just like a normal business too, right? It's a correlation to that as well. Most businesses in the first 3 years are unprofitable. So what makes you think that trading, given that it's a business, what makes any of us think that given, trading, given that it is a business, what makes us think that, it's going to happen quick? No business goes quick. It looks like it from the marketing, but no business like rushes to the top. Some do if they're like really good businesses, but that's far and few between, So give yourself grace, admit where you're currently at. Like, where are you really in your trading? Is it like realistic for someone to be successful in a year? Sure. I have one student out of 200 plus that I've taught that has gotten pretty successful over 1 year, right? But he's on year 3 or 4 now. So it's a lot different now. But there's only one person that was able to take what I teach and use their own experience to then, have some really spectacular stuff happen. It's not a common thing. And we may be the exception. But then again, it's more likely that we're not going to be the exception. So expect that it's going to take time. Admit it right now so you don't fight yourself about it. It took me 3 years to become clear on what it is that I'm trying to do. Okay, and even at that point, I was still having a struggle. Thankfully, I was able to hit profitability, small profitability, like maybe, $300-400 every 2 weeks, right? But I was aiming very low, right? And then year 4, things got exponential. But that's also the time when I invested heavily in a trading psychologist so I can understand that aspect of things. And then 2 other mentors who have, combined at this point, like 40 years experience, aside from ICT. And then tens of thousands of hours of me just going through it. Hundreds of thousands of screenshots, literally. I have like a separate 10 terabyte hard drive. I have so much data. It's nuts. It's taken a lot. It'll take a lot out of you too. But that's something you have to just agree with from the start and admit from the start. And if you don't agree to that, then maybe trading isn't for that person that doesn't agree. And that's just a cold, hard reality. This is a hard industry. And the realities of it, they look pretty familiar to some of the marketing, but the realities of it are pretty different. It's going to get to the point for some of us that it's boring, right? The things that you have to do to maintain and manage your success and you as the person, sometimes it could be a little bit boring, could get lonely. And everybody deals with those things in different ways, but you got to expect this stuff. It's very difficult. You're going to lose money. You're never going to not lose money. So over time, you're not going to learn to not lose money. You're going to, like in general, you're going to learn how to lose less, how to manage yourself better. Okay. How to have a better perspective in the market, and how you can also gain a lot more clarity as far as what you're doing in the marketplace over time. Okay. So expect it. People don't like to hear this. This statement is not going to get people to, stick around on the live call, let alone come and be part of the private group, and it is what it is. Okay. I'd rather tell you the truth and be a mentor that talks truthfully to you rather than blow smoke up your ass and make it so, long term you have a horrible mindset that's not going to allow you to be profitable. I'm willing to take that sacrifice, being as public as I am, because trading is what I do. Okay. Nothing else, really matters to the quality of life that I have. It's definitely a fun thing to do, to teach people, because, I've been blessed beyond my wildest expectation of what I think I've even deserved, so being able to give that back in some way is something that inspires me. So that's why I do what I do. Um, and if that's a truthful statement, I got to be honest. I can't be prodding you along just to get you excited. Right. So, and I think it's done very, very good things for the traders that do stick around. Again, we don't have news till 7 a.m. So a lot of this pre-market stuff, I'm not interested in finding a setup on. But again, if you guys do have any questions, let me know. And I hope that you guys take what I just said to heart, because I wish I did. I wish I did. Because I would have saved a lot of heartache, a lot of time. But, that's how the cookie crumbles sometimes, you know what I mean? And I'm really grateful for it when I look back on what I've been through. It's turned me into the trader that I am today. Both my life experiences, the hardships I've had and had to overcome, but then also the things that I've done in trading that were less than ideal. And it's going to be the same for you as well. So don't shy away from these things, because those that do end up either quitting or failing in trading. But the ones that stick around, the ones that are successful, the ones that end up doing very, very well for themselves, with whatever their goal is. Maybe it's to just cut your hours at your work, and still work because you maybe like your job, but trade to give yourself a stimulus. Maybe that's your goal. Maybe your goal is to quit your job, right? Regardless of what it is, you're going to have to accept the realities to get there. You're going to have to do a lot of work. It's going to be hard. You can and will do it if you put your mind to it. It's not impossible. I'm not special, okay? But, what I can say is I just never quit. And no or failure was not going to be an answer. I burned the ships. I went to, I invested in a education to do something that I ended up not liking. So I don't want to go back to that, and I never will. I don't care what it took for me to never have to go back there, even if I had to work longer in these jobs that I didn't like. No matter what it takes. If you need to get 2 jobs, 3 jobs, you should be willing to do that to fund your goal and focus on the process, right? More than the trading, because the process is what's going to get you paid overall, and the markets are going to be here. Okay. The question is, are you going to do the right things so you can also be here? Right. And being here, hopefully I help you guys get to that point, where you do the right things, you build confidence. The only thing I can guarantee as a mentor is I can give you clarity. And what you choose to do with that clarity, whether you turn profitable or, wherever this takes you, it's going to be up to you. I don't necessarily lead with, I give signals, right? Obviously, when I'm pointing something out and saying, hey, this is a good idea, a person with common sense can see, oh, well, that might be something to consider. I don't encourage you guys to take any of the trades I give, but I do encourage you to internalize the things that I talk about with price, because we do navigate price very effectively. And I think there's a lot of stuff you guys can get from these calls. So yeah, hopefully you take some of this stuff to heart, you guys. My objective for the day is up here. And we have news at 7 a.m. So when it comes to pre-market, obviously you want to look at what happened in London, which is here. We're basically in second stage distribution, so it's probably going to have a very shallow run. We got a new day opening gap that we're hanging out above. That's what this pink box is. Excuse me. And we filled this whole regular trading hours gap, right? The rest of it, right? We zoom in. This whole entire area here was a regular trading hours gap, but you could see at 6:30, we already offered buy side and sell side in that idea from the open. So buy side, sell side. So this lower part, the reason this box is not the whole box, right? Because you can see it goes down into here. The reason that that is identified here and not the whole range, there's nothing wrong with it, but we could see that this upper part is inefficient. See how this one is fully delivered through, to and through? So that's a balanced price range. So what happens when it drops through it and then comes back? It should respect it and go lower. What about this? Right, this low, we have sell side, buy side. The regular trading hours gap from previous day's close to current day's open. Once it opened up, you could see there was an empty piece of price delivery down there relative to the regular trading hours. So what did price do? If there's an idea framing price going lower to say target this or whatever else, it's going to want to reach down into that, and that's part of the context. Okay, for price to want to go lower, and in this case, pretty dynamically. So that same thing is being used when I had identified this here with this gap, and you can see the result and what's happened, right? Again, we're inside the macro right now. We've been inside the unreliable macro. So we'll see if this thing again gives us that shallow run. I don't want to see it come down here. It could, but I'd rather, because we're above new day opening gaps, because we're above that regular trading hours gap, we've pretty efficiently offered buy side and sell side, right? So buy side here, sell side, so that's that piece. Then we get buy side that comes and overlaps this as a bullish breaker. So this high to that low is now all balanced. And you notice that we got buy side, sell side, buy side, sell side. We take the high. What do? We come down. And this is a mitigation block, right? Low, high, failure swing, break above the high, right? And then you also take that range because it's balanced, measure out the midpoint. It needs to stay in the upper 25%. We use the upper 50% of the upper 25% of the range. See that? We split it in half. It's the 8th level. And look at the body closures respecting that using the logic I'm telling you about. And it's been off to the races, right? Price got above it. Another breaker formed there. So high, low, higher, high, high, low, higher, high, mitigation block, balanced price range to upper 25, displacement. And then we're also in second stage distribution of the market maker buy model. And look at this larger time frame. We may also complete this, but that piece, this market maker buy model, is a part of a larger 8-hour market maker buy model. You see that? So getting above this high, we wouldn't want to see this high to that low. Once we get above that, we don't want to see the 25% get broken through as we look to potentially target this buy side liquidity pull up here. Okay, so I hope you guys are able to follow along. Hopefully all the stuff that I just said makes sense to you. If not, of course, leave me a question. But yeah, so I have a lot of conviction that this is going to get up here. We had a pretty aggressive run from Monday. We got high, low. Pretty much tried to fill in the whole entire new week opening gap. So we got sell side. Stopped a little bit short, so it's still a little inefficient down there. I don't think that we're going to end up going down into that, though. We'll see, obviously. If we do end up getting price to run up above this and then it smashes aggressively lower, say it breaks this low, in that case, my attention would then jump to this. But, for now, we've used an 8-hour bullish order, bullish fair value gap here, which is right in there, right there. We also got high, low, higher, high breaker, which I talked about. Talked about this wick on Sunday. Talked about when this gets traded above, it's going to be a market maker buy model to this high, relatively equal highs. And looks like everything that we've talked about yet again is unfolding, right? We're either the most lucky people on the internet next to ICT or, we know what we're talking about, okay? And I think it's the latter. So again, I hope everything's made sense so far. Do you guys have any questions about any piece that we've just talked about? So we got 15 minutes until the open. You just throw a 1 in the chat if you guys don't have any questions. I just want to know where everyone's at. Okay, appreciate you, Emmanuel. Appreciate you, DJ. So yeah, let's get this projection real quick. So we got 1 standard deviation confluence with these equal highs, completing the market maker buy model. Aside from that, though, we can actually take that off. We got the 2.5 standard deviation from the initial projection that I laid out for you, which is from this low to that high. This low to that high. See how it came up, tapped the 2.5 or 2 to 2.5 standard deviation. That's generally when a rejection or retracement will take place, or consolidation to then continuation. And then the full price swing, it's going to be up here. So we'll see if it can get excited enough this week to get up there. You know, it's NFP week, so I think that it could get up there. Maybe it needs NFP to do so, though. But we'll see. This is what we outlined on Sunday. Trying to aim for buy-side liquidity, assuming that this order block here was going to be respected. So again, like I said, things that we talked about on Sunday, this was what we did on Sunday. I drew this little idea out and literally told you we're going to go higher. And what's happened? For whatever reason, it dances to the music we play. So it's always good to see. So we got this weekly wick here. Basically broke outside of it. Can I have this little note there? I said if it breaks above that, this, in my opinion, will be a market maker buy model. The S&P is absolutely on a rampage. So is the Dow. I mean, they're all running aggressively. Damn, that's new all-time highs on the Dow. Swept the liquidity that I aimed at. Another gap. The price went right into. Must be a random occurrence every week. Then we got this inversion. Price came down into it, respected it, and then continued to rally, targeting these equal highs, which is yet again another thing that I outlined on Sunday that got smacked. So the Dow, the Nasdaq, the S&P basically holding this. It's kind of a mess, the S&P, but it's okay. So again, everything that I'm going to be looking at is going to be aimed at trying to take a buy. We'll see how it wants to treat this upper part of this regular trading hours gap. Once it gets above that, we need to stay in that upper 25%. Here, I'm actually going to outline the whole thing because we need to get the accurate quadrant levels. Okay. So yeah, it's pretty much all the significant details that I have for the chart currently. So we'll see if all this stuff can continue to hold. We don't want to see this get outside of this level here, like to the downside. We really enjoy seeing price hold inside this. This is a 15-minute perspective, obviously. The daily or 8-hour looks like it's going higher. 16-hour looks like it's going higher. Very obvious equal highs. And we got all this consolidation. May have somewhat of a hard time getting through some of this because just sideways congestion. Lots of balanced delivery. And again, in order for us to keep trusting its bullishness, we want to see dollar continue what it's doing here. But I like this buy side liquidity as a longer range target. On, what was it? So I think it was on Sunday. I talked about the 20, 40, 60-day look back. Let me actually do this real quick for you. See if I can get this done quick. Okay, so if you take this, you go 20 days from the start of the month. So 20 days. Okay. Wait, what? Why didn't it? $20 days. Ironically, it lines up with our buy side liquidity up there. So that's essentially all you do with the 20, 40, 60-day look back. You take the start of the month, okay, draw a line and go 20 days back, 40 days back, 60 days back. If we do that, it's going to put us in line with these levels. The longer term horizon, intermediate target, right? Obviously, outside of the 20, 40, 60-day, we're able to also identify previous weeks, which is not that long, right? It's not that much time. But we have a confluence with the 20, 40, 60-day look back. And, NQ is hitting an alert. Oh, it was my target from yesterday. Didn't hold it, obviously, getting all the way up there, but target was hit. Outside that regular trading hours gap. Something that we do have to consider is when price does open up in here, I mean, this is a big, large range. So large ranges can lead to small ranges, right? Fast London session can lead to choppy New York session, okay? Fast Asia and London definitely need you to be cautious going into the New York session. These are all moments that can create high resistance, consolidation, lackluster delivery. So when you see these things, you got to lower your risk. On top of the fact it's NFP week, so my risk is cut to 75% of what I normally use. Right. So if I'm risking $1,000, I can only risk $750. If I risk $100, I can only risk $75. Right. It's just the way it is. You have to manage risk. Okay. You have to have this conditional awareness. And the only way you gather conditional awareness is either through experience or being able to borrow someone else's. So that's where being on calls like this with communities like this can be impactful and very helpful, right? Because you can just add a lot of things to your mindset and experience that you may have only just been able to discover through experience physically. So, and I know a lot of you guys have been really enjoying the experience, so grateful for that. So you guys have any questions? Okay. But yeah, so again, I hope everything makes sense. We have the shallow retracement. So yeah, we'll see what it wants to do here. Again, it's all pre-market. We're heading into the open. So it's going to populate the regular trading hours gap. It's going to be there. So 15. So right there. So from this level, up to this, there's going to be a gap when you switch to regular trading hours. So we're opening up at a premium with a discount gap. Generally, there's a pretty high percentage likelihood that price, when it has a discount or premium gap, that once we open, it's going to try to run towards that gap and try to fill it in a little bit. If we see that within the first 30 minutes, we remain in the upper half and then we get displacement, continuing the buy side delivery, that is a very strong indication that the whole session will most likely favor buy side delivery. We're staying in the upper 25 to 50% of the regular trading hours. It can't fill it in completely, right? So that's a key idea that helps you identify intraday volatility direction. It's something that ICT has taught, but it's went over a lot of people's heads. But let this serve as a reminder. Okay. But yeah, I was going to say something. I totally forgot. It was important. The second time that happened today. Ay. So yeah, again, if you guys have gotten value, if you get value from the community, don't forget to like the video. If you're new, don't forget to subscribe to the channel so you don't miss any of the live calls that we do, because these live calls, I wish I had someone doing what I'm doing every single week, willing to answer questions live at any given time, right? But hey, that's just me, right? So yeah, we'll see what happens. I want to really see this be a shallow retracement. For the euro, I'd be watching this high and this up here. This wick midpoint needs to be respected if it's going to keep going higher. So we don't want to see it close below that midpoint. If it does, that might be an issue, and we may look to reach a little bit deeper. So again, when it comes to PD arrays and order flow, like how do you get into a trade and then trust that your entry in the moment is continuously supporting your idea? Do any of you guys know? Let's make this interactive actually. When you're in a trade setup, what do you have to see the candles doing and how the candles are relating to the PD arrays? What are the characteristics you want to see? I know you guys in my private group will probably be able to answer it. I mean, I guess you can answer. I'm not going to ask you guys to just wait. Yeah, let me know your thoughts. What do we require based on the things that we talk about? If we're in a trade setup, how do things have to be responding to each candle? How does each candle have to relate to one another? What do the body closures have to be doing, right? Do they have to stay in a certain area, right? Like what has to happen while you're in a trade to define that price is in fact supporting your overall direction and your trade idea? So let me know in the chat. So we do got 3 minutes. So we're going to see some fireworks here pretty soon. Well, actually, because it's the open, I'll just tell you. Well, if I was to take a trade in here and I see price running, we have an order block, we have other PD arrays, we have candle to candle that has wicks. We got to make sure that it's respecting, if we're bullish, the upper 25%, upper 50%. Yeah, see, DJ, you got it. So you want to think about these things rather than, oh my gosh, is my stop going to be taken? Right? Good job, Emmanuel. Exactly. Stay above that consequent encroachment of all the PD arrays price trades into. Stay above the wicks. We want to see rejection blocks forming, inverted fair value gaps. We want to see candles that just keep going. We don't want to see many PD arrays get violated. If they do violate things on a lower time frame, just move up and see, is it worthy or showing you that it's going to turn around relative to a time frame above, maybe 1 or 2 time frames above what you entered on. If it's not breaking any of those on the upper time frames, it may very simply just be a retracement to take liquidity on these lower time frames to set you up with a bigger move. But this is why framing things from a higher perspective is also very significant and helps you become very effective with what it is that you're looking at, and builds trust, right? Clarity, right? So yeah, we still got things going on a rampage through to the buy side. I noticed that the Nasdaq is definitely the slower mover for whatever reason. The other two are literally at their all-time highs while the Nasdaq is lagging behind. So we'll see what it wants to do. So yeah, I hope you guys are able to follow along with the thing I talked about in terms of the 20, 40, 60-day look back. You also can do a cast forward where you're basically doing the same thing from the start of the month, but casting it forward. That, on the other hand, allows you to project where, whoops, that allows you to project where the next potential significant low will form. And sometimes it'll be like 21st day or whatever, and that's fine. Just in that general vicinity, in the general area. So yeah, you see there's that regular trading hours gap. We're watching the equilibrium. I want to see it stay in the upper half, upper 25% if we're going to keep going up, and it's going to be trustworthy. If I was in the trade, that's what I'd be thinking. We got a wick here, displacement. We're at that high of the regular trading hours now from previous. So still getting up there. So yeah, right out the gate, it's in a hurry to get up there. So the narrative is correct. Drop down to the 1 minute chart. I'm not taking a trade right at 6:30. You guys know my rules. We don't take trades right at 6:30. We need a macro, either the unreliable macro, or we wait for 6:50. So 20 minutes from now. And we'll miss moves because of that, right? Because of those rules. But guess what? We also save a lot of money, a lot of mistakes, a lot of getting chopped up and being correct still on the day, but we're not part of it because we get stopped out, right? This rule is something I had to really lean on, because at one point I was very confident that I'm correct most of the time, because I was through evidence of me doing it and reviewing, right? What I thought at the beginning and then later on in the week, later on in the day. But I noticed that the setups that I would take, they get stopped out while I'm still correct on the market. Most of the time we're either in pre-market or in the middle of the hour, right? And price was, not doing too much. I wasn't considering the right things. And I didn't have the right disciplines to keep me away from bad scenarios, because I was correct, but I would get stopped out. So what did I do to fix that? Well, one of the lectures ICT did, he talked about this, and it really resonated with me. And then I tried it for a month and I was hooked. It proved to me that I could find setups all throughout the day, right? But the best setups will show up during the macros or close to them. Or the macro will begin a move, and because the move started in the macro, or maybe your model showed up in the macro, but you missed it, and you have a clear target that we're reaching for, in that instance, entering towards the middle of the hour, because of that contextual back-end timed delivery being in confluence with your idea, the continuations that you find will become a whole lot more dynamic, a whole lot more reliable, as long as you have your model that you're looking at, okay, and observing in the chart. And, over time, you can get more familiar with other types of models, so you have more variation, but, you got to stick to one model at first. And it looks like our narrative from Sunday up to today and what we laid out, looks like we're going to hit that very early. I would have much rather seen them drop down, wipe this low out first, then go, but it treated this high to that low as a BPR. and the timing element is outside of the rules that I employ. So beautiful run. We're correct. We knew what price was going to do, outlined it before the fact, and gave you the reasons why it should go up there and what supports that. But it's just not inside my rules. So no trade setup was taken. I'm sure I'll have a student message me saying that they engaged. But yeah. Man, I feel like dehydrated today. I don't know why. I was sick as a dog yesterday. I felt like total crap. Maddie, by the way, I'm just reading your message. I'm glad that it works now. The indicators. Yeah, we can actually go through the indicators. I can kind of like walk you through, what's being presented. If needed, obviously, just let me know. But yeah, again, if you guys have been getting value, don't forget to like the video. It really does do a lot for the channel. It helps me get in front of people that I know personally will need the information, because what we do here is not typical. And sound not proof just from me, but from the students that stick with me. The evolution that happens with them is really humbling, that's for sure. So if you guys could do that for me, like the video, subscribe to the channel, I would really appreciate it. It also tells YouTube that what we do here is worth listening to. And, I don't think I'm alone in thinking that what we do here is worth listening to. It's not flashy. I don't sell you a dream. I try to be honest with you, give you good advice, not financial advice, but good advice. And it makes you better. So sometimes it's hard medicine, but it is what it is. So everything is doing exactly what we said it was going to do. Reaching for our targets. I'm personally, again, going to wait till 650 and then we'll identify something. Could we have been aggressive and engaged something like this? For me personally, I would have needed this to end up wicking down into that if I was going to consider something aggressive. I was not thinking that this is going to tank below this. I already laid that out for you well in advance, that I would not want to see these new day opening gaps get traded through. How I wanted to see the regular trading hours not trade to the midpoint and stay in the upper 25%. I gave you all the different pieces and components to why I believe it was going to be bullish. And then, of course, the dollar continuing to drop supports that idea. We got the currencies potentially looking to want to go higher, just like we said it should. We have balanced price range in here, sell side, buy side, sell side to buy side, right? So we got a order block. We have a low, high, failure swing. This up candle's a mitigation block, that whole range of this candle. And we got our inefficiency up here that I've mentioned. So I do believe that that is going to be targeted. We'll see how fast it wants to get up there, if it gets up there. But and then for the euro, we have an inversion beautifully being respected. So yeah, for all you currency traders. So now that we've actually hit this level, we got to be cautious. Again, we are potentially in a larger market maker buy model, but because it's been so fast, I would not put it past them to try to pull it down, at least, to 50%, or maybe this gap in here. If it blows past that, then we have to consider this trendline liquidity, right? It may reach down and attempt. I still wouldn't want to see it break through this, but they could very easily want to go down there. But until it breaks 50%, I'm not going to put too much weight on that, because again, breaking this high, we are trading down into a previous balanced price range that's now inverting, or accumulation to potential distribution. So we'll see how sensitive that is. Looks like it's very sensitive. So we got a rejection block up here, so I would be watching that. So watch that rejection block. It may wick up into that and then use that PD array to get us down to here. So again, I'm waiting for the macro. So let's see what happens. We got a large wick in there, displacement. So let's see how this stuff behaves. 2 minute, 3 minute, 5 minute. So we got a 2 minute, 3 minute fair value gap. So let's see how price reacts here. If we get above this candle here and it gets above it, when it returns into it, I'll go on the seconds chart and see if I could find like a breaker. Yeah, we see a breaker right here. So if this gets above that, we've already hit a 3 minute fair value gap in here. So that'd be something that I would watch as we get closer to the macro. Got an inversion fair value gap in here. So yeah, now we're above that. So watch this level here. Watch that level sensitivity right there. Again, we're still not in the macro, so still outside my rules, and I'm not aggressive on NFP week. But again, watch that level. If it's not going to reject using that as a rejection block, it's going to invert and be an inverted rejection block. Supportive of price trying to go up. So let's watch that. We got this breaker in here. Obviously, it's a 15-second chart. So we'll see what happens in here. Again, I'm not taking any trades right now. We're just observing because it's not in a macro. We got to get our rules to unfold. If this cannot close outside of this, looks like it's going to. But if it just wicks in here and then we break below the 50% of this, that would make me interested in seeing them go lower. But clearly they inverted the rejection block and now boom, it's moving higher. Beautiful breaker entry. Breaker opportunity. It's just not inside the macro. I want the macro. I'm hunting the macro. At least at a minimum, I'm looking at 645. And then we'll see what happens. If this was happening at 645, I would have already been in the trade. I think that already, honestly, yeah, that already offered my 30 points, so I would have already been out. But again, this is like the big picture here, right? Going bullish. We've already hit a significant level. So they may want to hang around in here at some point. We'll have to see evidence of them wanting to do that. We're not just going to assume, right? We got a wick here, displacement. It's coming back down into that. That's a balanced price range. Got a breaker. We got sell side, buy side. That's a bullish order block. So it looks like it's on just a rampage. They are ripping to the upside. Dollar is starting to tank, starting to fall off. That's what we want to. Oh, sorry about that. That's what we want to see for bullishness on the indices, as we have been outlining today. Again, big picture is this. See, is that wick on the daily too? No. See, something else in terms of context that we can use. Got that inversion fair value gap. So if we take this high extreme down to the low and grade this price swing, given that it's a buy model, got that 50% right there that has led price higher. Let me get the octants real quick. So yeah, we're coming into an octant right there. We have a little ways to go. But again, we're now inside this inversion on the daily. So yeah, this is yet another reason why it may not want to go deeply down to the sell side. Now, if we break this low, again, we could really pull up equilibrium and then just see, okay, it breaks that low. It's a discount right there pretty much. But it's going to have to break this order block. So think about this, right? This down movement, that's an order block. We have an up wick. We have a swing low. That's 3 PD arrays. We have a little gap in there too. So if it breaks through that, it's more likely that it's going to want to reach a little bit lower. Okay, so we're approaching the macro now. So let's get situated here. So watch this level here. So it's respecting it, right? We created a rejection block in here. We like to see that. When it comes into a PD array, we want to see a rejection block. So this should potentially keep going. If you wanted to get like a smaller projection, you can go like this. 2.5 standard deviation. Ironic that it gave a retracement, right? As we teach about this projection. Full 4 standard deviations gets us up into this level. And ironically, that I think is in the 8th level right there. So we'll see if price can keep gravitating up into that. All right, notice from the low here to the high, we're staying in that upper 25%. We still got this big gap down here. Again, if this does end up seeing the dollar bottom out, say it doesn't go lower, and it starts to break through to the upside once more on the dollar, and then this results in this low getting taken, this could potentially turn into a market maker sell model. And we got relative equal lows here. It's been swept a little bit. Has it? Yeah, just a little bit on that. But that's a contingency, right? So if buys don't continue and hold in here, and we were to displace breaking through this low, we now have a market maker sell model framework to go off of. And then we would be able to adjust to that in that regard. For now, though, we're not going to think that. That's contingency, right? You got to be ready for anything. And yeah. May or may not have been. May or may not have, but I've only been on eval. Allegedly. DJ, you're funny. And still play around with them. Yeah, just let me know. I want you to try to shoot holes in the razor model indicator, Maddie. And then just get back to me with whatever thoughts you may have. But the thing is very impressive, I'll tell you that. So yeah, order block. We're really in a hurry to get up there. So second stage, or not second stage yet, but the distribution in this larger market maker buy model has now been engaged here. Damn, that was wild. Like a random hiccup right now. It's out of nowhere. So yeah, again, everything that we've talked about, the whole narrative, everything we mentioned, it's all unfolding right now. And now we're inside the macro. So now we'll be a little bit more trigger friendly. So we got low, high, failure swing. We're respecting this order block. So order block there, order block there. It's respecting. Of course, I don't like when it goes right out the gate and just starts ripping aggressively. I don't like it, right? Because a lot of times they'll come back and retrace a little bit. So I would really like to see them do that before it continues and ends up eventually getting up here. And then I want to see the characteristic, how it does retrace. And if it just continues to rip, then, you know, it is what it is. So yeah, it looks like that's going to be the case. It's going to just keep ripping. See, we have a cracking correlation. Got the Dow turning around. Again, the Nasdaq is the weak sister out of the three. The S&P and the Dow have aggressively repriced higher. So yeah, if you're aggressive, right, these are all areas that can be considered as continuation. For me personally, I'm not being aggressive. But this is an order block. If it's going to get up there, we should see a respect this. I personally would like to see a retracement, right? Like if it was to come down here, tag this, and then give me something like this back in line with the buy side, that'd be something that I would really enjoy seeing. So have this high, low that takes the stops, anchored in this order block, displacement higher, retracement into that. We got fair value gap. We got bullish breaker. We have a low, high, lower low, higher high. And it's respecting from the high to the low, that midpoint. So we have a low, high failure swing. This up delivery here dragged over as a mitigation block. So you kind of can see how the breaker and the mitigation block a lot of times do a dance together. I mean, it's already two confirmations in terms of order flow when both of them are showing up, right? So that's already pretty reliable that we're going to keep going. I noticed that it never even attempted to try to break through any of this. So it's in a real hurry. Oop. We basically went right into the target from earlier. So I'm watching the fair value gap. I'm watching these order blocks, right? One was here, presented an opportunity. One was here, presented an opportunity. And now we have a fair value gap. So if it's really going to be in a hurry, right, it should provide continuation from this. I wish it would have just not taken this so early. I wanted to target this for the morning, right? But right out the gate, we're in a real hurry. So we may, if it keeps this up, it may even get up into here already. You know, I said earlier that NFP might be needed. I still think that that's probably going to be the case to get us up here. But, you know, this is my draw on liquidity for the week. And again, we're inside of a buy model. So see the chat real quick. Okay, I had a soft expectation that Nasdaq is a six sister. Should slow down. It might be the case. It very well might be the case. I'd like for that to be the case. See, like if the Nasdaq would give us something like this, right, all we would need is a PD array to anchor it to. Maybe it goes to a discount, maybe not. All it needs to do is hit a PD array against the buy side, and then give us a change in state of delivery on the 5 or 15-minute chart. And because our narrative on that higher time frame is solidified, with me thinking that it's going to go higher, you know, if we're just in the right time, you know, I'm happy to engage a trade setup. But it seems that Dow is the only one that really wanted to give a retracement, which just is fine, but you know, we have this target up here. So the higher time frame equilibrium we used previously may end up getting targeted again. This thing is just ripping. Look, right out the gate, bullish power 3 on a rampage. Very shallow retracements. This is a beautifully delivered market maker buy model that we called well in advance. It's just moving a little too aggressively outside of the macro. Not really giving me a chance to not feel like I'm being aggressive. So yeah, like I said, if this is going to keep going, this is going to be a level that holds in price. We have trendline liquidity. I would not put it past them given how fast it's been right out the gate. We're also coming off of a huge range previous day. So that's another reason to potentially consider getting a retracement first. But, you know, sometimes it'll keep going. And being aggressive is one of the ways that you can get into these things. But again, my rules on NFP week, I'm not aggressive. That doesn't mean you couldn't have taken a trade. If this up makes sense and all that. Let me see. Obviously, it's not necessary. When price action behaves like that, it makes sense. I'm not sure if I missed that. In terms of not being aggressive, is that what you're referring to, Maddie? I think that's what you're referring to. The ICT has definitely mentioned, he's mentioned that about large ranges when he talks about high resistance and what could lead to those conditions. And I see now we're starting to retrace. See why I didn't want to chase price? Six sister SMT. You talking about like with the Dow giving a retracement while the others try to catch up, or while Nasdaq tries to catch up? That's true. Just with a lot of the things he's described, I mean, it's kind of I guess kind of a given, right? It's kind of just part of the explanation. At least that's how my interpretation was. So I'm in the same boat as you. I don't think he's blatantly came out and said that one's going to retrace to slow it down, but you see just from the characteristics, a lot of times that's what happens. Like right now, look what it's doing, right? The Dow hit the highs and it started to retrace before the Nasdaq, but now the Nasdaq's following what that started to do. So yeah, I would say that if this retracement takes this low out and then we end up getting above this high, that would be when we would consider buys again. I'm not willing to take a short in here. Again, I'd like to see if I am going to take a short, low to high, I want to use my market maker model flexibility protocol. And then I would look to probably take an entry down in here as a second stage distribution continuation, and then simply target equal lows. But I would really like to see reclaimed for value gap in here if we're going to keep going higher. But again, because of how fast it's been, because we took such a significant level, I wouldn't put it past them to do some type of nasty retracement. Everybody and their mama since yesterday is trying to buy because they think they're missing something. So it makes sense, even if it was just like a wick that they use to shoot down. I think it is definitely a possibility. Let's watch how this behaves here. We got buy side, sell side, retracing to the midpoint or lower 25%. So we got one change in state of delivery. If we retrace and then get a second change in state of delivery, so order block here and then another order block that gets closed below, or just simply peaks below, that'd be enough for us to then anticipate a deeper retracement. Higher time frame wise, the narrative's bullish, so shorts are counter trend, so they're lower risk than the low risk that you should be using right now because it's NFP week. I'd prefer to see it break above this. Right, we've already now swept liquidity, which is nice. Let's see. See what she wants to do here. It's an inversion. It's confirmed as an inversion actually because we closed below it. So again, maybe another reason why trusting a little bit of a breakdown in here could be likely. This, for those of you that are in my private group, we got elements to one of the models I use. It's just I don't want to pick a top. So I'm going to be a little bit more conservative here. Let's go see the Dow. The S&P is giving a wick. Again, you always want to keep in mind what that higher time frame looks like. There's nothing really wrong, in my opinion, with the consideration given the inversion and the retracement happening here to catch a small, higher risk short from that level. I'm not going to do it. I don't pick tops. I'd classify this as somewhat picking a top. So I'd like to see a breakdown, maybe a return back into this. But that right there, if you're aggressive, simply use that to then target this. There's really nothing wrong with that inherently. It's a little bit more aggressive because it's at a high. We're at the top. So we've got this rejection block here. So I hope you guys are able to follow along. Hope you guys have been getting value. Appreciate all you guys that have liked the video. Definitely helps us out. It's a free way to say thank you, right? If you do appreciate what I do and what I've done has helped you, doesn't cost you anything but time. And I hope you feel that your time investment, because that's like the most important asset for any of us. I hope you feel that it's been spent productively. So yeah, if this rejects, it looks like it's using that as a rejection block. These are early signs that if it gets above this fair value gap, we will get continuation to this octant here. So we've got high, low, high failure swing, break above this. That puts this in jeopardy or confirms, right? Starts to confirm that we'll keep going higher. So we'll see what happens. See what happens inside this reclaimed. We also have an inversion here. If it closes above that, that's a nice inversion. Small little rejection block in there too. So it looks like we're not going to meet that midpoint down there, equilibrium. So we've got that little stop run. Price is still on a heavy rampage. Dollar's kind of somewhat slowed down, but it's still gravitating lower. So things are supportive. See how it didn't close outside of it? It's not fully confirmed as an inversion yet. Let's see what this thing does here. Again, we got a type 2 dealing range continuation scenario here. If it does get up above this high, because high, low, high, failure swing, rejection block, wicks being respected. But the inversion for value gap needs to be triggered. If it would have closed on this candle above it, any return back into that would have been a buy for me. But again, you either have rules or you don't. You know. And I got very strict rules. So So this is nice. We got 4 seconds, so a closure outside of that is definitely a good sign. We'll see if it has enough juice to try and give us somewhat of a continuation. It's just been so fast, it's pretty risky. But I don't think this is chasing price in this type of scenario. It's definitely a pretty shallow retracement after such a huge run. So that closure outside of that inversion, if it's going to go higher, it's going to go higher from here. And if it doesn't, say it fails and breaks through this again, and then we get below this low, that's my double change in state of delivery I'd like. And then that would set the stage for us to get down to equilibrium down there. Maybe even tag some of this gap. So we're inside the macro, so let's see if this thing can give us acceleration from here. Beautiful. Man, we must be like the luckiest community on the planet. Or we know what we're talking about. So yeah, that was my 30 points right there. So I did engage that inversion right there on this this next candle, this black one that wicked lower. So from here, 83 to, is that 18? 34 points. It's not bad. Not bad. It pays the bills. Definitely pays the bills. For those that may be new, so you know I'm not playing stupid games trying to win stupid prizes. See the entry right there? I guess it was 84 to 18. How much is that? So 84. Whoa. It's had like a twitch in my back. Holy crap. Yeah, let me see. Measure that at. Measure it. It's 18. So yeah, 33 points. It's not bad. Just because I got out because my rules on NFP are so aggressive that I don't generally like to hold. That doesn't mean that we're not going to get to our full target over here, which is the octant. Okay, so quick little bread and butter scout. I outlined the whole thing. Told you if it gets above this, we'll probably see price move. We're inside of a macro. I gave you more than enough time to consider what I was talking about. From the start of the call, I told you exactly what my thoughts were. Everything that we've talked about up to this point, every single component has worked out. We've had our contingency plan outlined. Okay, we know exactly what we're looking for. And when it shows up, I talked about the rejection block. I talked about the wick being respected. I talked about when it was moving higher, I wanted to see a retracement first. We came down and literally swept this small liquidity pool. That's all it needs. We're very fast, right? It's very fast going higher. Dollar is still going lower. There's no reason to worry about a rejection like this coming down and taking this out, and letting that overpower your perspective. The only way that I would think of shorts, like I said, I didn't want to take a short in here. Look at the intuition that I've put on display for you. I'm sure that anybody that would have seen this who is not well versed was probably thinking this is the 2022 model. Let me take that inversion for value gap with no context, right? And they probably got wrecked. And then they say ICT concepts don't work when they just don't know what the hell they're talking about, or they don't have any experience, right? It's like someone that comes off the street, wants to be in the NBA, and then tries to go into the NBA right away, right? Say they get the chance to go into the NBA right off the street. They have no clue what they're talking about. They have no idea what they're doing. So what is going to happen? They're going to get wrecked. So same thing with these concepts. There's a lot of people that talk about ICT and they try to claim they know. And, you know, there's also a lot of people that talk shit about him, right? And the concepts. You could talk shit about him. You know, that's fine. If you don't like the persona or whatever, you know, it's a little emotional if you ask me, because we don't know him in real life. But what he's giving is absolutely the best in the industry. And it's proven by people like me who come out here, who have been under his tutelage for such a long time, who are now able to come out live in front of an audience, trust the process so much, and then engage in an unbothered way. Win, lose, or draw. Every single week. And I'm doing it every single day in my private group. But look at that. It offered a little bit more from the setup that I gave you. Okay. 49 points, 50 points from the area that I literally put you in front of. Now, again, I don't give signals, but I don't know what you would call that, right? Right? And people are very lazy. They don't like to pay attention. And, you know, sometimes I frustrate them, but it is what it is. You know, you got to work for it. You got to know what's going on. You got to understand why I'm trying to do something or do some other thing. If you don't, you're wasting your time being here. And that's not what I want you to do. You know, I want you to leave every one of these calls thinking, man, I'm so grateful that I was able to gather just a little bit more experience, you know, and build that confidence. Because that's the reason I do this, right? I'm not here just to hear myself talk. You know, I used to listen to my videos and not really like to hear myself talk. I think now when I've been reflecting on it over the last couple of months, because I just started rewatching some of my videos. Normally I would just do them and put them out. I don't know what it was. I think it was like imposter syndrome, right? I don't know why. But I was reading about how, you know, someone that, you know, works for a very long time to do something, when it comes to like hearing themselves teach something, like with people that are mentors and whatnot at a high level, you know, sometimes there's a feeling of like uneasiness when you listen to yourself. I don't know. It could be somewhat traced. Maybe I'm wrong, right? But I think that kind of describes why I didn't want to listen to my own videos. But now when I listen to my videos, I can't even recognize the person that I used to be, the trader that I used to be. And it's in a good way, you know? And so I'm grateful that, you know, I've been able to get to that point in my journey. It's just a reinforced testament to the fact that all my hard work that I've done to get to where I'm at has truly paid off, not only in the chart, but also in my own psyche and how I view myself. You know, and I want to help you guys get to that point with yourselves, where you know that you know that you know. Like nobody's going to tell you any different. And nobody's going to be able to teach you something that's going to pull you away from what you do. You know, you're you, and you're going to stay doing what you're doing and be confident in it. That's what I'm trying to gift to you when I do these calls. That's why I show up every single day. Most of the time, even when I'm sick. But yesterday, I felt like I got put on a road and crushed by a semi truck. It was not a good feeling yesterday. And I appreciate you guys' patience. Those of you in the private group. You know, I show up probably more than most mentors do every week. Probably answer more questions and I answer more questions in probably 3 months than all these mentors do in like a year or 2 or even 10, because they don't even like to answer questions. It's wild. So why are you teaching then? You just like an egomaniac? Is that what you're trying to satisfy? Like, you know, if people give you time, it's not to be taken lightly. Because again, like I say all the time, you guys have every reason to go to other places because I don't have a big community, right? I'm not like super entertaining. Like I don't try to do ridiculous entertaining things. I mean, this is pretty entertaining if you ask me. You know, you're getting some high level information that can really revolutionize what it is that you're doing. So to me, it's interesting, right? It's entertaining, but for many, it's not. And it's unfortunate because I know what this can do. I mean, think about it. Those of you that are on the live calls with me, what if we could switch places and you could come on and do what I'm doing? How different would your life probably look? I mean, that in itself is a pretty solid testament just from what I show you on live calls and the things that I point out and, you know, the things we discuss and go over. Right? And if the only thing you ever achieve is being able to take, you know, 2 or 3 trades a week that are profitable, you know, give or take some that end up in losses, but you know how to recover it and you don't worry about it. Maybe the only thing that you can achieve is to cut hours at your job. Obviously, that's a very low bar, given the opportunity and the fact that we're doing this literally every single day. We're doing something like this. Like I'm sure that by the end of this call, I'll have 2 more setups that we can call out. But just imagine what little minimum thing you can do and how impactful it'll be. And I know for a fact, because of over 200 people I've worked with individually, unless they're all just lucky and the things that I'm teaching make you the luckiest person on the planet, you know, what we talk about and what we do works. This process that I have accumulated and organized to be able to share with everybody, again, you know, all love and appreciation to ICT, but you know, we have our own style within this now. And you're going to be able to have your own style too. You know, so if you could just attack the minimums at first, you know, give yourself grace. You know, I'm sure you guys will be absolutely surprised at what you will achieve. And I'm here for it. I want to hear all about it. You know, I want to be a part of that. So I get to watch what you guys do and see how you change your circumstances, you know, potentially, right? I don't know. It really does something to me. See you guys succeed. I never thought in my life that I have something I'd be able to give to really help people's lives. You know, especially with where I came from, like my past, my life. I think it's really, I don't know. It's undescribable. I heard ICT say that a couple of times when he was looking at his career, kind of doing like a reflection. He's like, it's undescribable. When you arrive, you can't even really describe it, right? And I didn't think that was true, but I mean, you just feel free. Like no one can take anything from you. Like you have something that can manifest as much success as you want. And you can do it without emotion, without worrying about it, or at least, you know, minimal emotion. And it's not the end of the world. You could do it from anywhere in the world. You could pass it on to your kids. And the small amount in trading, like for someone that is equipped, the small goals are pretty big goals. Like think about it. $30,000 a year, $50,000 a year. That's like what, $20 to $30 an hour, if you were to do the math, before taxes. You know, think about it. If you look at it from that lens, you know, that's a small goal. 30,000 a year, that's very small in comparison to what's possible, especially if you're able to come in and do what we do every day, every week. Which again, I show and have in recorded resources, right? But some people are living their lives, working jobs that pay them $30 an hour, $20 an hour. And it's like, this gives you a golden ticket, right? To either maximize that if you do like your job. I don't encourage you to quit your job. Some people keep jobs because the insurance, the benefits. You'll get to the point where that's going to be unnecessary as well. But don't rush that. But just think about the possibilities in this. Think about them from like a normal type of job. To make 30,000 a year or 50,000, figure out or do the math on how much money has to be made per week. And what you find when you do that math is it's very, very minimal. It's like $200 to $300 a trade, a couple times a week, right? There's going to be bigger days, there's going to be smaller days, but the average, if you can make it 200 to 350 bucks, depending on your size account. I mean, if you have a large account and you're okay with the leverage, you can go a little harder, and then things get even more interesting. It's all the same. I could have made $800 instead of $300 on this move, right? I could have made $8,000 with the same piece of price delivery, same logic, same everything, same conviction, same everything. I could have made that 30 grand in this one trade if I went a little bit more aggressive, way more aggressive, right? I think it's kind of overdoing it, but I'm just trying to express a point here, right? You don't need a lot to do a lot. You really don't. But you do need a lot of a skill set. And again, I hope you guys have been seeing progress. I know a lot of you have, but some of you that are new, that may be struggling, just know that it's within grasp. And what we do here is, I'm confident, going to help you. If you guys have any questions, just let me know. And yeah. Maddie said, I'm sure if I made that up. That's something I have seen effectively. One should engage in time distortion. Yeah. No, I think that's a pretty valid point that we were discussing earlier. Of course, it's not going to happen every time, but it is pretty common when things are just ripping aggressively and the slow mover needs to catch up. Sometimes they'll take a little bit of a pause in the other ones while, say, the Nasdaq tries to catch up. It won't always catch up entirely, but it is something that repeats. So yeah, looking at price here, we have our setup that we just called out. It ran 55 points. I took down 33 points because I have rules, right? My rules around NFP is I really don't care about big moves. I'm just aiming for low-hanging fruit profitability and managing risk because the risk is elevated. So I take down the 30. I could have held it for 50. There's really nothing in here telling me not to, but it's okay. 30 is enough. So everything's scalable. Think about it. All you need to do is capture something like this. That one little move, little piece of this huge run. And that little small fraction of the move can be enough to absolutely flip someone's life entirely, right? That little small piece, which we find literally every single week, every day, multiple times a day if I'm really pushing it. Buys and sells. You guys have seen it here on YouTube. I've taken buys and sells multiple times in the same day, navigating the manipulation, then the displacement. The buy side of the market maker model to the sell side of the market maker buy model, or the buy side of the sell model to the sell side of the sell model, right? Or the sell side of the buy model to the buy side of the buy model. ICT has said that that's the highest advanced perspective to be able to have. because you can navigate to a PD array on that higher time frame, going higher, right? If you're expecting it to react and go lower, you could trade to it, counter trend, and then away from it once it fulfills that one PD array. But that one larger time frame PD array, whatever that may be, maybe it's a fair value gap of some kind, can be used in many ways as a target or an anchor for another setup, right? To go with the trend, right? I love how this doesn't have like really any lag. I hope the quality is good on the video. You guys told me earlier it was good. So, but yeah, lots of stuff has been discussed. What's up, Axe? Appreciate you hopping on, bro. Yeah, if any of you guys that have joined a little bit later, we have talked about so many things. If you have a particular question, of course, I'm willing to answer it. But I do encourage you guys to watch the whole replay because this call was phenomenal, or has been phenomenal. We're not done yet, right? Still got 30 more minutes. But we've already called a really nice buy. We have sell side, buy side delivery. Got that inversion fair value gap, but we also have the up candle there. It's acting as a breaker. High, low, higher, high. Why is this a breaker? Because we got that low and that low that got swept, and we got displacement going higher. I talked about the type 2 dealing range idea. This is a type 2 dealing range in the form of a potential entry model. Basically what I used here, right, to get us up. This thing's respecting this as a bullish breaker, and we hit the octant. See how that octant is an opposing PD array to the uptrend? What happens when we're trending aggressively and we hit an opposing PD array? What can be expected reasonably? Let me know in the chat. And again, if you guys haven't liked the video, definitely go do that. And subscribe to the channel if you are new, because we provide a lot of value. It's a simple way to say thank you if you appreciate it. So thank you in advance. So Axe said speed. Okay. Anyone else have any opinion on that? What should happen when price runs into an opposing PD array if it was trending, right, or just simply moving towards that direction, going higher, and we're bullish? If it hits an opposing PD array, what's to be expected? Yeah, Maddie, exactly. Possible area of retracement or counter trend setup framework. Because you can go from the octant here, maybe there's a big range, right? Or maybe it's a fair value gap over here or whatever. It may hit that level and then start to decline, right? And then all you got to do is look for a PD array that's below, inside of the range that it's, rejecting into. And then you just frame things up, right? This is a bullish PD array. So we went from an opposing PD array down to a discount, but also back into a bullish PD array. So a short going from the opposing PD array down to the PD array that would then support continued buy side, that range in there, understanding this context, like this conceptual idea, can help you start to frame out counter trend moves. And this is fractal. It's not only on the lower time frame that this happens, right? It happens on the daily chart. So if we hit a daily fair value gap, the next day may look to be bearish a little bit as it retraces, creating a bull, and then maybe it creates a bullish power 3 on the next day, and then it starts going higher again, right? So if you think about it, again, it just adds a layer of setups that are present for you. Okay, and look at that, beautiful. Sell side, bodies are respecting that. That's a beautiful confluence. We have wicks, right? Wick here, we have one more big one. Then we have this one that stops right in its tracks and closes above the breaker or the bullish order block, because that's what that is too. And then we change state of delivery. And then on the 32nd, we have a small market maker buy model. That's interesting, huh? accumulation, accumulation, smart money reversal, distribution doesn't really form except this one. So yeah, one distribution, and then it runs above that high. But that's a small market maker buy model, a failed market maker sell model, right? If it's going to go down through this low, it's going to deliver a sell model. It's a very small fractal, obviously. We're inside this high up here, inside that candle. So yeah, dollar's still going lower. Nothing's telling us this is not going to go higher. This was just simply a retracement. Stop run. Got this wick. We got accumulation, accumulation. Just simply drag that over. I guess both of these are very close, so you can, and inside one another, so you can kind of put them together. But in particular, that last up candle right there, that last up candle, look how it is so beautiful. This is like beautiful. It's amazing how organized this stuff is. Again, we got one change in state here, another change in state, getting up above that, starts to break away. And now this, just like how this was a BPR and how this was a breaker, we would then kind of look at this high to that low in the same way. So measure that out. Then gap measure. So that's our graded price swing. So it needs to stay in that upper 25%. If it stops like this, that's a rejection block. If the next candle forms a wicks down into it and then has a hard time getting through it and we start to accelerate, that is a sign the price is going to go higher. And we're still in mode of continuation. So now we're getting a change in state of delivery here. Early change in state. Full change in state will be above here because that's a bullish order block. If you move up, it's a 1 minute change in state of delivery yet again for continuation. Got this wick here with this wick, so let's see how that's treated. So again, I appreciate y'all hanging out. It's been a pretty good call, if I say so. Beautiful. Order flow is just continuing to be just beautiful. Again, there's no macro, so we wouldn't want to take any real trades at this moment. You know, the opportunity in the macro was provided there. So technically, this setup that I called earlier, if you held it further, it's actually offered almost 100 points. Okay, so now we got this. Again, that's an order block. So I'd watch that if I was you. Again, if you guys have any questions, just let me know. Remember, that's the main reason why we're here, right? To learn, and then for you guys to have someone that can potentially answer your questions. Because most of these live calls that people have, they either don't have the answer to the question, they answer it like, you know, they don't know what they're talking about, or they just completely ignore you. So, once these calls get pretty big, obviously I'll have to do some type of management, some way that you guys can share questions with me so I can answer them in a orderly fashion. But for now, it's very manageable, and all of your questions can be answered. And if I don't know, I'll tell you I don't know. But it's a very rare occurrence. I don't know everything, but most questions that I get are very common questions. So there's always an answer. So yeah, did any of you guys get to take a trade today? Let me know in the chat. Still one in the chat if you did. If you did and you're in my free group, I'd like to see it. So you can go ahead and share it over there. Same thing with you guys in the private group. You guys know where to post those types of things. That's a bit sketch in there. So this blue box here, that is a new week opening gap. Okay, so it's kind of stalling in that. Something's wrong with my eye. It's like blurry. Is it that? No, it's blurry. And it's computer screens. Ay, ay, ay. I think I need some like eye drops or something. I don't know. Just all of a sudden got my right eye blurry for whatever reason. So yeah, we're still respecting this range that I outlined. Still respecting that level there as accumulation to distribution. So if you just simply used that accumulation to distribution theory in the market maker buy model, that alone offered a setup. If you missed it, it came down, offered it once more, gave you another opportunity from that level to bag 20 to 30 points. Yeah, we may now get to the point where things may stall out and the fast-paced previous day may start to have an impact. Now that we're a little bit deeper into the New York session, I guarantee you that it is really a fact that there is a ton of people trying to buy now. So the amount of liquidity that's probably below this low, it's probably a lot more significant and attractive. And again, them retracing down into this or even this does not upset the overall buy side delivery. Now, if we were to overtake this and get below 50% from the low to the high, then, like I've talked about before in many instances, and just shared on my Instagram this morning, we have a protocol called the Market Maker Model Flexibility Protocol. And if we were to break this, that'd be something that I would use to then try to get involved. Right? I think I need to go shave, man. But yeah, do you guys have any questions? I feel like there's a lot less questions today. I think that's a good thing. I hope. I guess that means I'm doing a pretty good job of teaching this stuff, right? Yeah, I hope you guys have enjoyed the call so far. Just kind of in a moment in price where it's not really doing much. We have 1, 2, 3 drives. If we get that 3 drives and change the state of delivery, that's a risk of this giving a retracement. So yeah, this is not something that is super attractive in here. I would pay attention to that. If we get below it, watch how it treats it. If it rejects it, we may be coming for this low. But this is a moment that I would wait. There's no model that I'd like to take a trade on that's present right now. This wick in there is really telling. That's a big wick. And the body's completely closed below the high. When we get above highs, when you wick through it and then it closes deep inside of it, that is a sign that we're potentially going to look to go a little bit deeper against, in this case, the buy side. It's a rejection candle, right? We're closing below. So that's not necessarily the greatest sign. Now, if this thing was to do this whole dance in here and then displace aggressively, respecting this range, and we close above the 50% of that wick, that would tell me that we're going to, continue to keep going. We're also in that higher time frame octant level. So it's a quadrant. Well, an octant, right? It's the middle of a quadrant. It's being very, very sensitive, that level. The currencies didn't really do much today, huh? They didn't do much at all. Man, look at that equal low. Sheesh. Holy crap. That is 1, 2, 3, 4, 5 lows all in one area. It's a pretty strong breaker right there, huh? Like stopping like a brick wall. It is refusing. It's like, nah, I'm not going down there. Stop trying. Okay, I've got that high and that low. So if I was a currency trader, I'd be looking at that. My main focus, if I was going to trade currencies right now, would be these levels here. Why would these levels be important? If I was looking to buy, let me know in the chat. Why would those levels be important? Let's see if you guys know. Just let me know in the chat. Why would those green levels be significant? I'm keeping an eye on the Nasdaq, by the way. Let's see if y'all know. Oh, a little hint, right? We're going lower to go higher. So why would these levels be important? Man, this lemonade is so good. Have y'all ever had this right here? Oh, it's like the greatest thing on the planet. Validating market maker buy model. Okay, well, why though? Why would that validate the buy model? What are those levels? Invalidating PD arrays, validating them as bullish PD arrays. I guess that's kind of part of it, but what are those levels right there? Mitigation block, yeah, pretty much. Or what's another thing that is talked about with those levels? What's on the left side that should be compared on the right side and supported? What are they in simple terms, right? because you're not wrong, right? You pretty much got it. I know you know. But it's accumulation, previous bearish balanced price ranges that then invert and then turn to distribution for the buy model. So if we can get up above that, you're in a much better scenario than you to buy than you are if you just try to get down into here and catch it at the deeper low. So these are all bearish BPRs, right? Buy side, sell side, buy side to the equilibrium, sell side. You know, if it were to retrace back into that, we want that lower 25 to 50% equilibrium get respected. But those are all delivered up to that point as a BPR going lower. Looked like this was potentially going to be a sell model. This is a good example for me to lay out the market maker model flexibility protocol that I've been sharing a lot lately. So this here, and this high to that low, that's a market maker buy model, right? Price gets above equilibrium, we rally up, we complete it, right? You come over here though, maybe you thought that this high to that low, once it breaks 50%, it's going to be a sell model because maybe you're bearish, but it goes below it and then refuses to stay below it. And matter of fact, we start to rally up against this drop that took place initially. Well, if this continues like this and we show that it refuses to go back below that, we then have to consider this range from this high to that low. Okay. And then once we break above equilibrium from that retracement that then started to go higher, once we're above equilibrium, we're looking at the market maker buy model now instead of the sell model. So you flip from one that fails to stay below equilibrium to now watching the equilibrium of this swing. And if it gets above that, we have accumulation laid out already. Drag that over, we're above equilibrium. You know, maybe it rallies up a little bit and then drops down below it, but stays inside this up candle here, which is a form of mitigation. But again, if you want to keep it very simple so you can understand it easily, I know some students get really confused about certain things, but this simply just turns to equilibrium being aggressively traded through or just simply traded through and respected. Failed sell model confirmed by the equilibrium on the sell model not being traded through and then staying below it. And we just got accumulation or previous balanced price ranges on the left side being traded through that should invert. So accumulation to distribution to then reach for the highs up here off the heels of the failed sell model. If you're not in a sell model, you're in a buy model. If it fails a sell model, you're going to probably see a buy model unfold, and then vice versa. If you're seeing a failed market maker sell model or a failed market maker buy model, right? You then may have to observe price creating a market maker sell model. Like if this equilibrium fails and we have this retracement that can't get above equilibrium, you just simply move it down into there. And then if this goes through that, we're in a sell model. You kind of see how this process works. And once you understand market maker models in themselves, how this can be helpful to you. Do you guys see it? Do you see the power in this idea? It's very simple, right? Some people tell me it seems too simple to even work, but you see me do it every day, right? No one talks about this. You know, maybe you'll start to see other people talk about it now if they somehow stumble across my small channel, because nobody's talking about this. Literally no one. I've never heard anybody on the internet, and I have a lot of friends, and I've watched a lot of people try to teach market maker models. None of them have identified this. ICT's never even talked about this, but it's something I discovered as a repetitive phenomenon, given the fact that we're always in some type of market maker model. When I would consider thinking about that, and I would, spend time studying times when certain market maker models fail, I noticed this, and I was like, does this happen repetitively? And it happens all the time. Like, And the clarity it gives you is just nuts. At least that's how it is with me. So I hope you guys feel the same. I hope that I did a good job explaining this. But it's just one of those things. So yeah, we're going into 750 now. So let's actually get back to Nasdaq, and we can kind of see that it's somewhat died out. What happened, Nasdaq? You lost steam, bro. we came in at the perfect time, right? Things may pick up right now. We're about to hit the macro, so it may start to pick up, but I mean, it's been kind of slow. There's opportunities in there based on what we talked about. Let's move around. Let's see if there's any. Yeah. Another rejection block. You notice where the rejection blocks form a lot of times? Inside of PD arrays, inside of liquidity that's been taken. So a little gem for you guys who may be just starting to study rejection blocks. Got one right here too. So this next candle, if it trades into it and respects it, there's a chance for it to keep going higher. We have zone right there too. Somewhat. Yeah, this is pretty gross in here. What I do like is that wick. So look at that wick. Dude, my freaking eyes are bothering me so badly. Oh, man, I don't know why my eye is doing this. It's like really blurry. One eye. It's like it's so annoying. Ay. The life of a trader, right? Freaking starting to have eye issues. So much time on these screens. I'm too young for this, okay? Like 32, I shouldn't be having eye issues. Well, you know, who knows? We'll see what happens. See what happens. Yeah, I think we will still get the narrative to unfold. I really wouldn't put it past them to try to drop it a little bit. Maybe they come and revisit this. Then again, this high right here looks really nice. Again, you got to kind of limit what you believe could be taking place before NFP, because they may use 1 or 2 days to not do anything really at all. And then just NFP comes out and it just flies right up to the target. I'd really like to see how this is going to be treated up here though, because again, that's our full market maker buy model on a larger perspective. If you go to the highest of higher time frames, we have all of this as a big market maker buy model. If we were to zoom out, oh, freaking eye, dude. When I look up, it gets worse. But yeah, so we have the accumulation here. It's a big accumulation. This is a very special level here if this is a buy model, and that's why we positioned around it, right? Which was right there. I guess I was a little bit beyond it. That's right there. Oh yeah, all of this was inside that upper 25%, upper 50%. Yeah, see that right there? It's that low. This reaction So look at this again. I talked about this so much. I'm gonna talk about this and then we'll probably call it a day. But you guys hear me constantly telling you that when you frame setups, if you want to catch big moves and eventually look to graduate out of 20 to 30 points, which I encourage you all to start as a baseline because it's very easy, right? But this is in that upper part of the accumulation in this market maker buy model on the higher time frame. This inverted order block, essentially, because that's what this is. It's an inverted bearish order block to go bullish for the buy model. Or you could look at it as mitigation, right? Or accumulation to distribution. Regardless of how you look at it, look at the reaction from it. Remember what we talked about as well. On top of that is confluence, staying above the regular trading hours, upper 25 to 50%, not allowing for price to get down here. I literally told you guys, I do not expect this to be taken. I expect it to be left. And if it comes down, it should tap it lightly and go away from it. Right? Literally, like every single piece of the analysis we've talked about today went exactly according to plan, which is not a new occurrence, but it's always fascinating. It never gets old. Like it's wild. And of course, framing from the higher time frame, look at what that does for you in the setups you try to take a trade on. Assuming that things obviously get in line with your process, right? You're engaging your system. Right? It's just gorgeous. All these order blocks held up in price. I said it would be a little bit aggressive to take these without some type of retracement. And then of course, after I said that, what happens? Boom, it retraces, comes down into these levels. We close above that order block 50%, change in state of delivery, inversion fair value gap. And we entered on the inversion fair value gap, looking for 20 to 30 points. And that was it. And how much did it go entirely? Well, we just now, up to this point, have went 90 points from entry that I gave live before the fact in front of you for the millionth time from start to finish. So I just definitely wanted to point out the higher time frame response. Get it burned into your head that when you're on these lower time frames and you're looking for a setup inside of the kill zone, inside of the macro, you got to know what higher time frame level could be supporting you. And that higher time frame level can be coupled with another higher time frame level. Maybe an octant, like we talked about. You notice how that level has been very significant? We outlined this pretty early, right? And it's been important all the way up until now. So yeah, it's already 8 o'clock now. So again, we'll call it a day. I've had a wonderful day, wonderful trading day, beautiful setup. Every single element to the analysis we talked about is worked out. So if you showed up a little bit late, I encourage you to watch the replay. There's so much to learn. And I feel like, you'll get a lot out of that. Hopefully you guys did get a lot out of it today, and feel that your time was well spent. It's just a massive amount of value I'd be just pumping into these calls every week. So I hope that being able to shadow me and then also spend time with me when we're on Sunday doing the prep call, I hope that you guys feel that the different components that are there and the mindset and all the different things that we share has had an impact on your trading, and it's moving you in the right direction. I feel like if you apply the things we talk about, keep showing up to gain the experience, I think it's just inevitable, right? You become the 5 people you hang around, the average of the 5 people you hang around. It's the same thing with the content you watch, right? It's the same thing, right? At least in my perspective. If you watch a lot of shit, you're going to get shit output, and, you want your brain to be pumping out powerful things, things that serve you in the future, right? So, yeah. With that being said, God bless y'all. Appreciate y'all for hopping on. Let me know if you guys have any questions. I'll be around a little bit later. just got to go see my daughter, and then I'll be free. So if any of you hit me up on Instagram, I'll be able to reply a little bit later. But yeah, other than that, again, thank you guys for the love and support. Don't forget to like the video, subscribe to the channel. Hopefully you were able to follow along today and learn something. But yeah, with that being said, I will catch you guys on Sunday. And then, what is it? Probably, yeah, so next week, we'll have our marathon, our live trading marathon. So I'll do two more of these extra on the week of August 12th, or August 10th, I should say. Okay, so we'll be live Tuesday, where there's no news, Wednesday and Thursday from August 9th, because we do our Sunday call. So August 9th, 11th, 12th, and 13th. So mark that on your calendar. I'll obviously have it noted so you guys are aware, but yeah. So that being said, God bless, and thank you guys for hopping on, and I'll catch you on the next one. Have a great rest of your day, you guys.